What if I told you that a football shirt costing $100 is not just a piece of fabric, but a carefully designed profit system split across multiple industries? Now, think about this carefully. Every time a fan buys a jersey, money is not going to just one place. It is being divided between brands, clubs, governments, and even logistics companies. This is one of the most powerful hidden revenue systems in modern sports business, and most people never notice it. In this video, we're going to break down the hidden economics behind football merchandise sales and how clubs, manufacturers, and global brands turn simple fan emotions into billions of dollars every year. Let's get started. 1. The real breakdown of a football shirt. A football shirt may look simple on the outside, but its pricing structure is extremely complex on the inside. When a fan buys a jersey for around $100, that money is divided across multiple layers of the global supply chain. A large portion goes to retail operations, including store costs, marketing, and staff salaries. Another significant part goes to taxes, depending on the country where the shirt is sold. After that, a share goes to the manufacturer, who handles branding, production, and global distribution. Only a smaller percentage goes directly to the football club as royalty income. Typically, clubs only pocket a 5% to 10% licensing fee per shirt sale, which is why their primary financial focus relies on massive upfront sponsorship guarantees rather than individual retail transactions. The actual production cost of a shirt itself is relatively low compared to its final retail price. Materials, stitching, and manufacturing represent only a small fraction of the total value. This shows that football merchandise is not just about clothing. It is a structured commercial system designed to maximize value at every stage of the supply chain. For entrepreneurs and businesses, this is an important lesson. Pricing is not just about production costs. It is about branding, distribution, and market positioning. When businesses anchor their pricing entirely to the cost of raw goods, they leave massive profits on the table by ignoring the premium that consumers are willing to pay for perceived status and belonging. Football shirts are a perfect example of how emotional demand can turn a low-cost product into a high-value global product. Every jersey sold is part of a much larger economic machine operating behind the scenes of modern football. It also shows how global sports industries depend heavily on brand perception rather than material value. The emotional connection of fans plays a bigger role in manufacturing quality. 2. How clubs earn big money from licensing deals. Football clubs do not rely only on small per-shirt profits. Instead, they make massive income through licensing agreements with global sportswear companies. Brands like Nike, Adidas, and Puma pay clubs huge fixed amounts every year for exclusive rights to produce official merchandise. These deals are often worth hundreds of millions over time. This system shifts financial risk away from clubs. The manufacturer is responsible for production, inventory, and sales performance. If a team performs poorly or a star player gets injured, unsold stock becomes the brand's problem, not the club's. However, club still receives guaranteed income regardless of performance. This makes merchandise licensing one of the most stable revenue streams in football. These agreements also help clubs plan long-term financial strategies with predictable income. By securing these multi-year guaranteed payouts, elite teams can aggressively budget for stadium renovations or blockbuster player transfers without worrying about seasonal retail fluctuations. For business owners, this is a powerful lesson in risk transfer. Instead of handling every part of production and sales, companies can partner with larger brands to secure stable income. Football clubs essentially act like intellectual property owners. Their brand name alone is enough to generate global demand. This model shows how modern sports organizations operate more like entertainment corporations than traditional teams. It also highlights how brand rights have become more valuable than physical products in modern sports business. Clubs now earn more from identity than from physical sales operations. Ultimately, this proves that a business with a highly recognizable and trusted brand can monetize its intellectual property far more efficiently than it ever could by managing complex manufacturing logistics. 3. Direct TO consumer sales, the profit boost system. One of the most profitable strategies in football merchandise is direct-to-consumer sales. When fans buy shirts from official club stores or online platforms, the financial structure changes completely. Instead of sharing revenue with retailers, clubs capture a much larger portion of the profit. In this system, clubs act as both the brand owner and the retailer. This allows them to keep a much higher percentage of each sale. By removing middle layers like third-party stores, stores, clubs significantly increase their earnings per product. This strategy has become extremely important in modern football economics. By executing this shift, clubs bypass traditional wholesale discounts, allowing them to turn a standard retail item into a massive, high-margin engine for corporate growth. Clubs now invest heavily in digital stores, mobile apps, and global shipping systems to sell directly to fans worldwide. For business strategy, this is a major lesson. Cutting unnecessary intermediaries increases profit margins and gives companies more control over customer experience. Football clubs use this system to strengthen brand loyalty while increasing revenue at the same time. It also helps them collect valuable customer data, which can be used for future marketing campaigns. Direct sales channels are now one of the most powerful tools in the sports business. It also allows clubs to react instantly to player popularity trends and match performance spikes. This flexibility creates fast revenue growth during peak moments. This real-time responsiveness ensures that a sudden hat trick on Saturday can be instantly converted into global, targeted merchandise sales by Sunday morning. 4. Hidden revenue leaks. What clubs lose. Even though football merchandise generates billions in revenue, clubs do not capture every possible dollar point. One major issue is counterfeit merchandise. Fake jerseys sold in global markets reduce official sales and cost clubs significant revenue every year. Another hidden factor is player image rights. Some players negotiate contracts where they receive a percentage of shirt sales that include their name and number. This reduces the final profit that clubs receive for merchandise. There is also a growing gap between standard jerseys and premium versions. Modern clubs now sell multiple tiers of shirts. Basic replicas are affordable, but authentic player versions are much more expensive and generate higher profit margins. These premium products target dedicated fans who want the exact version worn by players. For businesses, this shows how product segmentation increases profitability. Different versions of the same product can target different customer groups. However, it also shows how complex revenue distribution becomes in global industries. Even small percentage leaks can result in millions of lost revenue at scale. Football merchandise is not a simple sales system. It is a complex financial ecosystem with multiple internal and external pressures affecting final profit. IT also proves that protecting intellectual property is just as important as increasing sales. Strong enforcement systems directly impact long-term revenue stability. 5. Why fans keep buying. The psychology factor. Football merchandise success is not only about economics. It is deeply connected to psychology and emotional identity. Fans do not buy shirts just as clothing. They buy them as symbols of loyalty, identity, and belonging. Wearing a jersey connects fans emotionally to their club, players, and community. This emotional connection creates consistent demand, regardless of price changes or team performance. Clubs understand this psychology very well. That is why they invest heavily in branding, storytelling, and global marketing campaigns. Each jersey represents more than a product. It represents emotion, memory, and pride. This emotional value allows clubs and brands to maintain high pricing without losing demand. From a business perspective, this is one of the strongest forms of customer loyalty. When customers emotionally connect with a brand, they're less sensitive to price and more likely to make repeat purchases. Football clubs have mastered this system better than almost any other industry. They turn emotional attachment into long-term revenue streams. This is why merchandise sales remain strong even when teams are not performing well on the pitch. IT also shows how identity-based marketing creates stronger loyalty than traditional advertising methods. Fans buy meaning, not just products. And there you have it, the hidden economics behind football merchandise sales. What looks like a simple football shirt is actually part of a massive global financial system involving brands, clubs, and fans across the world. From licensing deals to direct sales and emotional branding, every layer is carefully designed to maximize value. If you found this video helpful and interesting, make sure to like, share, and subscribe for more deep insights like this, and comment below if you ever bought a football jersey and which club it was from. Thank you for watching, and I'll see you in the next video.